Are you ready to uncover the pivotal financial trends shaping 2025 market volatility, crypto twists, and the economic forces driving today's global business pulse? Stay tuned as we decode the latest stock movements, central bank decisions, blockchain breakthroughs, and geopolitical shifts that will impact your investments, business strategies, and economic outlook. We begin with the stock market, where volatility and opportunity continue to define investor sentiment. Global markets have reacted sharply to a mix of factors including inflation concerns, central bank policies, and geopolitical tensions. The U.S. stock market has shown resilience despite mixed economic indicators. The S&P 500 briefly dipped earlier this week but bounced back amid strong earnings reports from major tech companies. Palantir, for instance, surprised investors with better-than-expected Q3 earnings, driven by rapid AI adoption. Meanwhile, Alphabet and Amazon continue to ramp up AI investments, fueling investor confidence. European stock indexes gained momentum, buoyed by positive earnings and easing energy prices, while Asian markets remain cautious amid slower growth forecasts and geopolitical friction. Technology and energy sectors dominate market focus, with AI firms showing bullish momentum even as oil prices fluctuate. The nuances of these market shifts reveal a landscape where technological innovation meets traditional sector pressures. Gazing deeper into sectoral performances, financials have been volatile due to interest rate fluctuations, while consumer discretionary sectors are navigating changing consumer preferences and inflationary pressures. Healthcare and utilities sectors, typically seen as defensive, have shown stability, shielding some portfolios during bouts of volatility. Investors are also watching emerging markets with growing interest. Countries in Southeast Asia and Latin America show signs of increased capital inflows due to their potential for higher growth despite global uncertainties. However, currency risk and political stability remain critical factors for international investors to track. Inflation remains a top concern globally. Central banks, particularly the Federal Reserve, continue to navigate a delicate balance between curbing price pressures and supporting growth. The Fed signals caution on future rate hikes as inflation moderates but remains above target in many sectors. Other major central banks face similar dilemmas amidst uneven growth and persistent inflation. Interest rates and inflation outlooks influence bond yields, equity valuations, and currency movements, keeping investors on edge as economic data rolls in. The interplay between monetary policy and inflation dynamics is crucial. While headline inflation shows signs of cooling in many economies due to easing supply chain constraints, underlying core inflation remains sticky because of labor market tightness and wage growth. This dynamic forces policymakers to adopt a data-dependent approach, leading to market jitters around potential policy reversals or extended tightening cycles. Moreover, the global economic outlook for 2025 presents a cautious picture. According to the IMF and other international institutions, global growth is expected to moderate, hovering around 3%, a deceleration from previous years. Factors influencing this include geopolitical tensions, trade disruptions, and the long-term effects of pandemic recovery spending waning. Emerging and developing economies face mixed prospects, with some grappling with high inflation, debt burdens, and currency pressures, while others, like India and parts of Africa, are projected to maintain robust growth trajectories. The divergence in global growth rates and inflation calls for nuanced investment and policy strategies tailored to regional contexts. Turning to cryptocurrencies, the market faced a turbulence period, with Bitcoin losing some recent gains, influenced by regulatory developments and high-profile security incidents in decentralized finance. Despite this, institutional interest grows, with banks and fintech firms incorporating blockchain into their operations. Regulators globally are intensifying scrutiny, aiming to balance innovation with consumer protection and financial stability. This sector remains a high-risk, high-reward terrain, demanding vigilance from investors. Beyond Bitcoin and Ethereum, innovators in the blockchain space are rapidly developing decentralized finance DeFi, non-fungible tokens, NFTs, and Web3 applications. The revolution could fundamentally reshape financial services, from lending and insurance to digital identity verification. Yet, technical challenges, regulatory uncertainty, and market maturity mean volatility will continue. Geopolitical tensions continue to ripple through economic channels. Trade disputes, energy policy shifts, and supply chain uncertainties combine to challenge global economic stability. The shift towards renewable energy accelerates demand for critical minerals, fostering investment opportunities in rare earth sectors while pressuring traditional energy stocks. Varied recovery speeds across countries highlight the importance of adaptable economic policies and business resilience. Specific geopolitical flashpoints, including tensions in Eastern Europe, the South China Sea, and Middle East conflicts, directly influence energy prices and commodity markets. These developments cause ripple effects leading to volatile currency markets, disrupting global supply chains and impacting investor sentiment. In the energy transition, demand for copper, lithium, cobalt, and rare earth elements surges amid growing electric vehicle, EV adoption, and renewable infrastructure expansion. Companies operating in mining and processing these materials stand to benefit. But sustainability and ethical mining practices have become critical scrutiny points influencing corporate reputations and regulatory approvals. Corporate earnings offer a mixed but informative picture. Tech giants lead with robust growth due to AI and cloud computing expansions, while financial services report varied performances amid shifting regulatory and market conditions. Consumer sectors face headwinds from inflation, but show resilience through innovation and digital transitions. Digging deeper, the AI revolution is not limited to technology companies. Traditional industries such as manufacturing, logistics, and healthcare are integrating AI utility solutions, powering productivity gains and cost reductions. This widespread adoption will continue to influence earnings, valuations, and sector rotation strategies. Given this complex environment, diversification strategies that blend growth with risk management are prudent. Investors focus on quality stocks with sustainable growth, inflation-protected bonds, and selective exposure to emerging markets and digital assets. ESG themes rise in prominence, reflecting changing investor priorities towards sustainable and ethical investment practices. Sustainable investing not only appeals to ethical considerations, but increasingly correlates with long-term financial performance. Firms with strong ESG metrics tend to manage risks better, attract cost-efficient capital, and gain consumer loyalty. 2025 is a year of dynamic change and opportunity, where informed decisions and flexible strategies are more important than ever. To stay ahead in this fast-paced landscape, keep tuned here for insightful analysis and timely updates. Thank you for watching FinSight News. Remember to like, subscribe, and click the bell for more essential business and finance news. Share your thoughts below and join the conversation.